Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Amazon stock. We're going to be breaking down, should you buy it? If it's seen some crazy lows. It's seen some of the worst falls since it's ever seen since 2008. And if we actually look at it here, you will notice a couple of things, right? We had that general downward trend. And another thing you may notice that the company in general has not done anything great since pretty much June of 2020. The whole stock has been just consolidating. And if we compare that to the S&P 500, ticker symbol SPY, this is just an ETF, you'll notice, right, since June, you'd be up handsomely on your investment right now from just investing in the market. So meaning that investing in Amazon has an opportunity cost, meaning when you invest there, your money's there and you could be missing on better opportunity elsewhere in the market. So that is one thing I do not like about Amazon. Now, Amazon is a great company. They bring in a lot of money, but what have they done over the past couple of years, right? There's more competition with e-commerce. There's better options out there. And I definitely think Amazon in general has not been doing very well, that it's considered a growth stock, right? Looking at their earnings, you will notice a couple of things. You will notice very shaky earnings, right? Looking here, it's up, they brought in over what the estimate stated, by 147 million, which seems like a lot, but Amazon brings in billions of dollars. That isn't something too great, and they actually were down on their earnings per share, causing the stock to go from 2,800 all the way to 2,500 and starting to stair step down to 2,100. Looking at the couple of earnings before that, right, we had a missed revenue and a missed EPS, causing the stock to sell off a little bit. But I definitely think Amazon, for me, there's that opportunity cost, right? When you invest in Amazon, you're missing out on opportunity elsewhere in the market. If you'd have just invested in the S&P 500 in June, you'd be up handsomely. And if we look at macro trends, this kind of breaks down all the fundamentals of Amazon in general. So looking, you will notice that they actually are starting to burn through some of their cash, right? They have $66.3 billion in cash, which seems like a lot because it is, but they actually started to spend some money of that, which, hey, companies spend money that they have for cash. That's why they have cash. Not a big deal as long as they don't touch their long-term debt. But they actually did take on more long-term debt, bringing the total to $47 billion, and that is up about 49%. For a company that does not bring in that much money, their profit margin is very slim in general. And I think that for me, all the Amazon stock I have, I'm going to sell. I'm up, a couple $100 per share. I have a couple of shares. I think my ROI would be better if I sell my stock with Amazon and put it elsewhere and just put it in the market, right? If we look at SPY, you will notice that it has a better long-term upward trend. And yes, we had that sell-off, but I personally would rather buy in on these dips than Amazon's dip, right? Or do you think one company is going to do better than the whole U.S. economy over the long term? I personally think the best investment for me right now is going heavy into the S&P 500, buying all these dips, holding it, and not having that volatility of a company like Amazon. So that's kind of what I am doing. I definitely think there's just better options out there. In general, comparing it to Amazon, Amazon's profit margin is super low, 4.4%, meaning for every $100 they have in revenue, they only profit $4.48, which is extremely low. Comparing that to other companies, even like Tesla with such large overhead, they still have a profit margin of about 12%. Apple has about 25%. A company like Visa is almost pushing 60% in profit margin. So that all those numbers are very crucial, especially for a long-term investor. And I just think Amazon, it's had its prime. It's very similar to what Netflix has seen, right? Where it was pretty much the powerhouse. They were the powerhouse of the streaming services. And then there's just been more competition. And with more competition, customers want the best option. So they will leave and they will go the more affordable route in some cases, or they'll go a more luxurious route. And that's kind of what we've seen with Amazon in general. Had their prime, but now they're starting to fade off, right? And so I definitely think that's kind of where my money and my head's at right now with the company in general. But the whole market, guys, I think will slowly start getting a turnaround probably within the next 6 to 9 months. And I definitely think buy some shares, right? Everybody loves to freak out stating that this is going to last forever. We've never had a recession last forever through the whole course of the general market. So start buying stock, right? At the end of the day, if you're investing for the next 2 years, you're investing for the wrong reasons. If you're investing for the next 40, 60 years, you're investing for the right reasons. Have that long-term outlook on every investment you have, and you guys will be okay. So guys, that is it. That's pretty much all I wanted to break down. Hope you guys enjoyed it. We will see you guys later in another episode. Remember to stay happy, stay positive, and stay safe out there. We will see you guys later. Take care.